to end the day basically flat. The Nasdaq, though, did manage a gain. It's now up nearly 30% from its April lows. So what does today's action say about stocks' direction in the second half? Have we just cleared a hurdle, so to speak, Tim?
Well, I think there's always a sense of certainty is better for markets. I think you have the jury is still out because I think there's a lot of interpretations from the bond market that this tax bill is deficit negative, certainly deficit negative over time. I realize there will be offsets to that, and there's a lot of conversation there. I think you have the last couple of days for the stock markets have really been somewhat directionless, frankly. I mean, and it's interesting because today felt a lot better for most of the day, and then in the last half an hour of trading, we gave up 45 S&P handles, 75 basis points on the Nasdaq, almost 1% on semis. I get back to, I think if you look at the market here, I would go back to kind of around April 5 through 9, but around through some of the lows and then the rebounds. Most of the repositioning came 2 weeks earlier from institutions, from hedge funds, from CTAs. And I think retail's been kind of long and strong here. I think the pain trade still remains higher. The things that should give investors some conviction is that I think you look at the sectors that don't get a lot of credit, industrials, financials. They've been outperforming. Industrials keep making relative highs to the S&P, at least over the last 6 to 9 months. And that's actually a pretty good sign. But I think the bond market still reigns supreme. I think there's a lot of conjecture out there. The bond vigilante language and rhetoric is getting louder. And I think the answer is still unknown.
So we'll see how the Senate comes out, right? That is a giant question mark. I actually think it'll end up being worse for the deficit than where we currently are. Mm-hmm. And to try to offset that, they're going to be as pro-growth, right, I think. So, I mean, we'll see how the bond market reacts to that. The growth takes time to come. The bill, we'll see what they decide. So, I've been a little more cautious. I feel like this run has been huge. I've got big Mag 7 exposure. I've been trying to hedge a little bit of that. I'm always long, so that's not going to change. But it does feel like things are a little ahead of themselves.
Yeah, I would just say on the Mag 7, you think about what we heard in late January and early February from all of them and the way the stocks sold off afterwards. And they started selling off before the S&P really topped out, if you think about it. And I think that was probably a concentration thing, a positioning thing. And, coming out of Q1 earnings, like, again, if you were bared up into it, I was definitely a bit skeptical. I was in the mindset that if they did cut CapEx, that probably meant something else about their businesses. And for the most part, they're all pretty good. And they all reiterated their CapEx. So you see right now, you just said the Nasdaq's up 30% off the lows. It couldn't be more different as far as from a sentiment standpoint right now, especially like look at a name like Google. Over the last couple of days, they had their user conference. The sentiment was really bad. And then they don't actually say anything horrible. And they say enough about the way that their products are rolling out relative to some of their competitors. And the stock goes up 6.5%.
You could make an argument that Google is, though, really a microcosm of how the market reacts.
It could.
Because people get all on one side of the boat on Google suddenly, and we forget that this is one of the I think, most diversified. I know search is what, anyway. But the market, that people have been that way, too.
That's good, Tim. I mean, I agree with you. And the one thing I would say is that, like, in your camp, the S&P probably fills in that gap from last and that would be a 4% move. And maybe that's the sort of check back you kind of need. And I don't think there's going to be panic. I don't think you're going to see a 25 VIX if we're down 4% from that. But the one thing I would say is at some point, a 10-year at 4.53, and maybe that's on its way to 4.75, and you have a dollar that's about 100 on the U.S. dollar index. I mean, there are some components there. If you don't get some of the right news on the macro front, there's stuff maybe going on in Japan. I don't understand it. Maybe Mike can help us out there. But there's something that's going to come out of nowhere that's going to test the metal of the rally, and who knows when that is.